Welcome back to Explain the Charts, everyone. Today, July 23rd, 2025, we're putting one of the most talked about stocks under the microscope, Tesla, ticker symbol Tesla. Recent headlines from our Google search indicate intense focus on Tesla's upcoming earnings report, with Yahoo Finance and Investors Business Daily highlighting it as a key event. However, the news isn't all positive. Investopedia notes increasing competition, particularly from Chinese rival BYD, which is undercutting Tesla on price and expanding globally. We're also seeing reports from Robinhood and Yahoo Finance of declining sales, including a significant 21.1% drop in California registrations in Q2, marking the seventh consecutive quarterly decline. Concerns about Tesla's brand are rising due to Elon Musk's political statements and ties to the current White House administration, leading to boycotts in some regions. Despite these headwinds, Tesla is attempting to diversify into autonomous driving and energy storage, which some analysts believe could justify its premium valuation. Yet, a critical concern is the stock's high price-to-earnings ratio of 115.81 as of March 22, 2025, suggesting investors expect massive future growth that declining sales may contradict. Now, let's turn our attention to the daily chart to see how these fundamental developments are reflected in TSLA's price action. Looking at the broader picture, Tesla experienced a substantial rally into late 2024, hitting highs near $488.54 in December, before entering a significant corrective phase in early 2025. The period from late January through March 2025 saw a steep decline, which aligns perfectly with the news of increased competition and softening sales discussed earlier. The stock plummeted from over $400 to lows around $220 by mid-March 2025, confirming the significantly down year-to-date sentiment from the Nasdaq article. This sharp reversal from its peak indicates strong bearish pressure, likely fueled by the market adjusting its growth expectations amidst mounting challenges. We can clearly see this price level near $220 acting as a crucial long-term support, where buying interest historically stepped in to prevent further declines. Let's narrow our focus to a critical period on the daily chart, specifically the sharp decline we observed in early June 2025. If we zoom in on the candles from June 2nd to June 9th, we observe a massive drop on June 5th, where the stock opened at $322.49 and closed down 11.72% at $284.7, accompanied by extraordinarily high volume of nearly 293 million shares. This dramatic single-day drop, likely a reaction to unforeseen negative news or a major sales miss, broke through multiple short-term support levels. This event further reinforces the bearish narrative, showcasing how quickly market sentiment can shift when growth expectations are challenged. The $280 to $290 range, which was briefly tested and held as support after this drop, is now a key level to watch. A break below it could signal renewed downside pressure. Conversely, if this level holds, it could be a base for a potential recovery, reflecting some resilience from buyers. The volume on this particular day highlights significant capitulation or large institutional selling, making its recovery even more challenging. Now, let's zoom into the most recent price action using the 15-minute chart, covering from July 18th to July 22nd, to gain insight into short-term dynamics and potential intraday trading opportunities. Over these past few days, Tesla has traded within a relatively tight range, broadly consolidating between $327 and $335. Notice the consistent bounces off the lower end of this range, suggesting an intraday support zone forming around $327 to $328. Conversely, the $334 to $335 area has acted as a consistent intraday resistance, preventing significant upward movement. The volume here, while still substantial, is lower than during the major daily swings, indicating a period of indecision or accumulation within this narrow band. Traders should monitor these immediate support and resistance levels carefully for potential breakout or breakdown opportunities. A sustained move above $335 on increasing volume could signal short-term bullish momentum, while a break below $327 might lead to a retest of lower daily supports. Stepping back to the daily chart for our final analysis, let's weigh the bullish and bearish arguments for Tesla going forward. On the bullish side, Tesla's long-term potential in autonomous driving, AI, and energy storage remains a compelling factor, offering diversification beyond traditional auto manufacturing. Its strong charging network and dominance in the North American market provide a solid foundation, and any positive surprise in upcoming earnings or an unexpected robotaxi announcement could ignite a rally. Conversely, the bearish case is strong. Aggressive competition, particularly from BYD's price cuts, ongoing declines in deliveries, and potential brand erosion due to Elon Musk's controversies, could continue to pressure the stock. The current high valuation makes it particularly vulnerable to any growth deceleration or negative news. Key resistance levels to watch short-term are around $335, then $350, and the prior highs near $400 to $420. On the downside, immediate support is at $327, followed by the critical $280 to $290 zone, and if that breaks, the March 2025 low around $220. Our unbiased prediction is cautious. The likelihood of significant upside hinges heavily on the upcoming earnings call surpassing highly optimistic expectations, approximately 40% probability. The probability of a downside move, especially given continued sales struggles and market sentiment, is higher, perhaps 60%, potentially retesting $280 or lower. Conditions reinforcing bullish sentiment would be strong delivery numbers and positive guidance on profitability for new ventures like robotaxis, while continued sales declines and tighter margins would reinforce bearish outlooks. Look for Elon Musk statements and any regulatory news concerning autonomous driving features as crucial upcoming catalysts.